Happy Halloween for folks. Um, today's show is going to be a little bit. I'm going to bounce intentionally. I'm going to bounce between a couple things. So last week we went through the Space Capital Space Angels Network quarterly report. I showed that to you and kind of did a deep dive into it. Well, it's that time of year again, and I've got another report to go through. So we're going to go through that. I'm going to go through a little bit of news, and try to wrap this up a little bit with maybe some hopes, expectations, things for the future, a little bit about what we're doing. So, by way of preamble, I'm Michael Lane. I'm the president of Liftport Group. We've been doing these shows for about a year now, so pretty happy about that. We do it Mondays and Wednesdays at this time. On Tuesdays, every other Tuesday, we host the Red Planet Live for the Mars Society, and every other Tuesday, we host the Pioneers of Space Commercialization for the Space Frontier Foundation. So we've got content on Mondays, Tuesdays, and Wednesdays at this time. So it's 5 o'clock on the West Coast. We're going to be adding a new show starting tomorrow, so pretty excited about that. That one's going to be a little bit different. We're going to focus on the military elements of space, Space Force. Pardon me, sorry about that. I think that's going to be really interesting because of my kind of globalist perspective on space. I think looking at the defense elements of space is pretty important. Some of you may know I refer to it as ACDC, academic, civil, defense, and commercial. Now, you know, in our shows, we spend an awful lot of time focusing on the commercial side of things. And that has really been kind of our bread and butter for the last year. But the defense side is pretty important, and we don't think it's getting enough attention. We've got the Russian invasion of Ukraine. Certainly, space data has really changed that fight in some really important ways. With all the stuff that's going on in the Middle East, the space data is going to play a role in that as well. So we're going to be watching that pretty carefully. Okay, so let me just go ahead and jump in. First, I'm going to do a screen share of I'm going to do a screen share of what we talked about last week. So Space Capital put out their Space Investment Quarterly, Q3 2023. Really just want to kind of focus on $3 billion of investment in the last 90 days. I mean, that is astounding. So we went through a lot of this stuff, almost 12 billion year to date. So then what's this other report that we're looking at? This is Seraphim. Let me jump back to their page. Seraphim has been around for a long time. Is it? Sorry, I'm on the wrong page here. Uh, they've been doing this stuff for a while now. 7 years, I think, something like that. 6 years, something like that. I'll post the link in the chat. And they're made up of a couple different things. So whereas Space Angels is really focused on the investment side, Seraphim actually has a couple different parts. They do portfolio development, so the kinds of companies that are in their portfolio. They have both an accelerator and an investment fund. So they're managing many millions of dollars. They have an accelerator. I think that's pretty interesting. $250 million have been invested, 1,200 jobs. Most of the companies that go into their accelerator get capital on the other side, so that's pretty neat. 81 companies, 93% have been funded, so that's their accelerator. They have a fund, no surprise there. They want to get more information, so that's not a surprise. And where do they put their money? They're focusing on digitizing space data. So I'm a little surprised that they're doing UAVs and drones. That's a shift that's kind of taken place over the last year, maybe the last 2 years. And they have a really strong research section. This report is quite good. This is the one that we're reviewing right now. 3 months ago, we reviewed this same one, the quarterly. I don't know what this one is. That's actually new to me. I'm going to take a look at that later. But we've been reviewing their stuff for a while. And this ecosystem map, we're going to talk about it more. So that's Seraphim. I've been impressed with these folks for a while now. Blogger has been just all over the world, sharing the story, building relationships. They have a lot of different. Incubators going at different times around the country and around the world. So interesting. I've met Anne Windblad once or twice. Don't know that much about her. I was looking for somebody else. Maybe they're not there. Okay. Anyway, so that's Seraphim. Solid company. I've been impressed by what they're doing for a while. Let me go ahead and jump into their actual document. Just a moment. That doesn't seem like it's sharing. There we go. That was peculiar. Okay, that was odd. Sorry about that for the delay. So their document is a little bit different. They're looking at slightly different things. We talked about the breakdown of how uh, space capital breaks things down into like these big categories: infrastructure, distribution, applications, and then these six categories, six sectors: satellites, launch, stations, logistics, lunar, and industrial. But these are not the same companies, and they do not uh, slice things the same way. So that's really important to just think about. So this is a different perspective, similar data, but not the same conclusions. So they break things down into these 7 sectors: um, build, launch, platform, downlink, analyze, product, and beyond Earth. So where space capital is kind of tying the beyond Earth into their infrastructure section, these guys break it down into kind of more carefully thought out silos. I think both have their place, uh, but it's important to understand kind of where each organization is coming from. Before we dig into that a little bit, this is their ecosystem map, and I actually have a version of this on my screen as my background image. I've had it up for really since the beginning of the year. It's a little hard to read some of this stuff, but so in space, debris removal, space situational awareness, orbital servicing, life extension, refueling, and orbital tugs. So that's one piece, but they break it down into a lot, right? So we're going to kind of dig into this a little bit. I don't know all of the companies in this list. I actually think that's great that things have gotten so big that I don't know everything. We've had Kyle Morris on one of our shows. The folks from Sisler Industries on our show. Astroscale's been on our show. Let's see, Scout. I've known the folks at Scout for a long time. D-Orbit's been on our show. Orbit Fab's been on our show several times. I know the folks at Starfish and Tethered, but we have not gotten them on our show. So that's kind of something on our to-do list. Same thing with Atomos. I met them maybe 4 months ago, and we haven't gotten them on our show. So, but these are the big topics, right? So orbital tugs, servicing, life extension and refueling, debris removal, and space situational awareness. I always point out that civilians write SSA, space situational awareness, and military folks, because it came down from Lieutenant General Shaw, refer to as space domain awareness. And I actually kind of gravitate towards the SDA description because I think it's a little bit better, but tomato, or potato. And then in space communication, that is an area that is really picking up speed really fast. Everybody knows SpaceX. People should know Kepler and SES. SES used to be the category killer. SES used to be the folks that had by far the most satellites on orbit. And now, a fleet that measures in the dozens is considered pretty small by comparison. I expect this section to grow quite a bit, especially with LaserCom coming online. So that's something we want to watch out for. Space infrastructure. What are the building blocks and facilities needed to enable this space economy? Space stations, free flyers, space planes, and space energy. It's funny because I used to work for a company called Space Energy that was pretty sketchy. So every time I see this, I kind of have visceral reaction of, oh, not those guys again. Avalanche is up here in Seattle. USNC, Ultrasafe Nuclear Corp, is up here in Seattle. It's pretty interesting that they're focusing on nuclear and radioisotope sources. I suspect in the not too distant future that you're going to start getting energy in space that's going from one craft to another, from space to space, and energy coming from space to the ground. Now, I know that's kind of a little on the edge of science fiction, but I remain confident that technology is going to come out. Space planes. Dawn Aerospace was having some trouble for a little while. I'm not sure where they're at right now. I'm a little surprised to see that Sierra's not in here, because that was one of their prime areas. They may not be listed because they're way bigger than the kind of companies that Seraphim and Generation Space operate with. So it might just be that. I believe Hermeus is funded by, or at least an advisor. I think Rob Meyerson is an advisor for Hermeus. Rob Meyerson used to run Blue Origin for almost 15 years. So that's coming online. I haven't seen a lot of activity in that sector yet. Free flyers in return. The one that I've been paying attention to the most is Varda. Varda has stuff on orbit right now that it's trying to get back down to the ground of Earth. So I'm a little concerned about that, actually. Instead of landing in Utah where they had planned, they've been redirected, and they're gonna deorbit into the Australian outback. I think that's actually a bad decision on the administration's part, because deorbiting hardware, deorbiting product is a necessary part of the space ecosystem. So we want to watch that pretty closely. Space stations. I love commercial space stations. I think it's a pretty tremendous potential. I absolutely love some of the organizations on this list. I'm pretty suspicious of some of the organizations on this list. So we'll see how this kind of plays out. VAST is funded by a crypto billionaire. Orbital Reef, funded by Blue Origin and Jeff Bezos's team. Voyager, Dylan Thomas is running that show. He's been an investor, and that's been a roll-up of several companies, in the same way that Redwire was a roll-up that acquired Made in Space and a few others. Voyager is a roll-up that acquired Nanoracks. Sorry, kind of lost myself there. So, and the reason I'm kind of pointing all this stuff out is because by going into this level of detail, it makes the report that we're going to look at a little bit more comprehensible. There's a lot going on the lunar side. I've been watching that pretty closely for a while now. I'm always excited to see this. Astrobotic just pushed back their launch. They were supposed to launch in a few weeks. That looks like it's going to be early December now. Intuitive Machines is in a race. It might be Intuitive Machines that winds up on the moon first. Astrobotic, Intuitive Machines, iSpace, and Space IL and Draper. All of those are, and Moon Express. 1, 2, 3, 4, 5, 6. 6 of these companies are a direct result of the Google Lunar X Prize effort from almost 15 years ago. So hats off to those folks for keeping the faith and sticking to it. Um, uh, I don't have as much confidence in the lunar habitats portion yet. I haven't seen anybody really rise uh, above everyone else. There's not a lot of money here. So I'm watching that one a little bit to kind of see where they go. Similar with folks going after resources. Now I'm a little confused why Offworld is put under the lunar logistics heading, because I would have put them under lunar resource utilization. And if this Offworld was over here, that would be a completely different situation to me, because I have a lot of confidence in several of the people at Offworld. I want Liftport. I want Liftport to be kind of in this category. We're not yet. We're not funded. You all know that story. But this is kind of where I see us starting and then moving over to this section of lunar resource utilization. So we're not going to get into the lander business. Other people are going to handle that. I don't think we're going to be doing lunar habitats, although I do think that we're going to be involved with space station habitats. So these are the areas that I'm paying the most attention to directly. I have a lot of confidence, but I think it is too early for on-orbit assembly and manufacturing. These folks here at Made in Space and Tethers Unlimited, they made believers out of me, absolutely, for sure. Curious, this chart hasn't been updated because Made in Space hasn't been a company for more than a year now. It was bought by Redwire, so I feel like the chart is a little outdated and needs to be modified. Same thing with NanoRacks. NanoRacks hasn't been a freestanding company. It's a part of Voyager Space. NanoRacks hasn't been a free floating company for about a year also. Leap Biosystems was getting a lot of attention for a while. I haven't heard that much about them. Most of the biosciences, life sciences, engineering, I don't follow them that closely, so I'm not going to sit here and try to pretend expertise in an area that I don't know that much about. So watch that closely. But this whole sector seems like it's maybe 2 to 5 years premature. And, I say that as a guy who's trying to build, an elevator on the moon, that there's reasons why some of these things are growing faster than others. And I understand why people want to jump in and stake their territory. But I don't know that the time is really ready for this stuff. Maybe some expertise can be developed, maybe some limited NASA contracts and other National Space Agencies contracts, but this seems really hard to do, and it's expensive, and I don't see a lot of these companies being funded. Notable exception might be Cislunar Industries, because they're trying to take stuff from orbit, melt it into slag, and then turn that slag into something useful. So I'm curious to see where that goes. And I think that's all I'm going to say about that. I just saw something on here that I want to check. So I'm going to just skip over some commentary there. Space flight. By the way, the word manned space flight is kind of a dead phrase, right? It's crude, or it's human rated, or something like that. But folks stopped using the word manned space flight 3 or 4 years ago. these companies are trying to build real systems. I have a lot of confidence in Axiom, Blue, Galactic, Voyager, SpaceX, Worldview. Those 6 companies, Space Perspectives, those companies have flown real hardware and real people, and that's going to continue. So definitely watch that. And other than this piece for Star Harbor, I actually don't know any of these other companies, so I don't have anything to add to that. But Star Harbor is trying to build basically a campus for learning how to go to space, complete with their own private vomit comet to do zero gravity simulations. Right, they've got some pretty big ambitions. So watching those folks. And then finally, space exploration utilization. That's a little outside my scope. Mining on other planets, is that asteroid mining? I don't know. Is that going to we've seen asteroid mining companies come and go. I'm a little skeptical. I was 10 years ago skeptical. I continue to be skeptical. One, for the simple reason that they're trying to go all the way to the asteroids, but there are small little local moonlets here, between here and the moon, that are obtainable, would be great technology demonstrators, and they skip them entirely because they want the big win of going all the way out to the asteroid mine. I think their ambitions are writing checks that their technology cannot cash. So this is the space economy ecosystem 2023. Like I say, I've got a similar one, a little bit different, on my desktop here. So I think it's pretty neat. We're going to switch over to the report here. I've gone through a lot of this stuff now. We're going to actually get into the meat of the report here. Let me just scroll up and check this. Okay. Okay. We've seen a lot of deals, so that's good. We talked about that the other day. Investment was highly concentrated in the Beyond Earth category for this quarter, largely because of the 2 top deals, Axiom and Sierra Space. Investors appeared to have a high conviction in the potential of the in-space economy and are funding the next generation of space infrastructure through these businesses. So let's dig into that next generation component. I've said for a long time, I've got kind of a roadmap. I call it the grand architecture, on how we're going to move into space. And it's going to start with launch and satellites. I think we have a checkbox. I think we've accomplished that. And then, we're really good at that by now. And then we're going to move on to space stations and space tugs, and then lunar development. And I think a elevator on the moon is going to be a component to that. So I've been saying that for years now, that grand architecture. But what I realized as I was going through this report is that there's an error in that thinking, because that's a very Americentric perspective. Other nations are still developing their satellite capabilities. Other nations are still developing their fire and forget launch capabilities, and only a few nations are even experimenting with reusability. So when I look at this, they're like, investors appear to have a high conviction of the potential of in-space economy and are funding the next generation of space infrastructure. That is very much a Western perspective, and I would say almost an American perspective, although Seraphim scans the globe. They have sites all over Europe, all over the North America, and I even think they have some stuff in perhaps Singapore. I'm not sure of that last one, but keeping in mind the grand architecture in the United States, probably not a great idea to be a rocket company trying to compete with SpaceX, Rocket Lab, Relativity, all those folks. That time to be in that sector probably has come and gone. But if you're in another country, it might be exactly the right time to be a commercial launch provider in India or France or especially the UK, because their development of launch ports, launch pads. So I look at this as the next generation of space infrastructure and think, okay, space stations are being funded. They are almost exclusively American companies. They might have subsidiaries somewhere else, but they're almost exclusively American companies. Same thing with much of that infrastructure elements and almost all of the lunar stuff. So what I'm seeing right now is that in the United States, well-established rocketry and well-established satellite companies, they're doing fine. And if you can find a niche, great, do that. But outside of the US, there's still a place for national sovereignty in rocketry, and there's a place for national sovereignty in satellite development. So I would say, going back to that grand architecture, people are still spreading their investment dollars across a larger spectrum. The U.S. is moving into kind of the next gen of space, and Europe and Asia are still in kind of the first gen for the most part. That's a broad generalization, but I stand by it. M&A with space tech is at an all-time high. We talked a minute ago about the roll-up strategies of Redwire and Voyager. The verdict is still out with Redwire. I have hopes, but I'm a little suspicious. Voyager, I think, has done well. They're not publicly traded, whereas Redwire is, so we don't have a lot of transparency into those. So it's kind of hard to do an apples to apples comparison. Just a few days ago, one of the sectors we're paying attention to, Multiverse Media, also owned by Dylan Taylor, sold to Space News as a way of consolidating some of the space media businesses, which is really interesting because I think that that's someplace that we, Liftport, and more specifically our brand, Better Futures, falls under. So watching that a little bit carefully to see how that plays out. Now, you'll notice that these folks are only tracking 5.6 billion. In the other document from Space Capital, they're tracking 11, almost 12 billion. So, pretty big discrepancy. These folks, not a discrepancy, difference. I don't want to say that one is right and one is wrong, but they're looking for different things. So I don't want you to fixate on these numbers and say that one is right and one is wrong. They're looking at different things. They're tracking different kinds of deals. I love that, $1.5 billion have gone into 220 companies. Um, Analysis seems to be doing well. Build and launch a little bit less. No surprise there. Um, uh, 82 deals this quarter, 85 deals last quarter. That's not really a surprise. Um, uh, I kind of like paying attention to this early stage build section, right? That's kind of us. Early stage Beyond Earth section. That's kind of us. So we make up the things that Liftport's paying attention to, makes up the largest sectors of this full pie. So that's actually pretty surprising. Again, we're breaking this down differently than Space Capital did. So it's worth kind of digging into this a little bit. I don't think anybody's surprised that Axiom and Sierra are the big winners for this last quarter. They're addressing this new Beyond Earth category, which, right, that's this stuff. I'd like to kind of see where this goes. I have a lot of confidence in Axiom and Sierra, but I don't think they're the only games in town. So knowing that there's reach from these space station companies out into other there's reach from these space station companies out beyond NASA, out to the UK, to Italy. Those kinds of deals are really important for this kind of next level of Beyond Earth space economy. So we want to watch that pretty carefully. Yeah, this amount of money is a little bit boggling. 350 million, 290 million. I don't even know who this company is. Mapbox with 280 million. So Axiom and Sierra, sure, they're kind of household names in this business. But Mapbox, $280 million. I don't even know who they are. I'm going to have to look them up. So curious to see that as we get more and more into this advanced technology sector, this space economy sector, it's actually really hard to track all of this stuff and pay attention to all the parts because there are just so many of them now. So that's pretty exciting. I think that's pretty terrific. Leaf Space is an Italian business represented in the top 10. Who would have guessed 2 years ago that an Italian space company was going to raise $40 million? I would not have believed that. So neat to see that the whole sector growing. Investment and activity. The number of deals is growing. That's terrific. The dollars in the deals not growing as fast. No surprise there. Because I spent all of my time looking at the numbers of deals, smaller dollar deals are attractive to me because that means that the venture community is spreading their risk amongst a lot of different kinds of companies and a lot of companies. So I like seeing that. I think that's really important. That I want to keep seeing the numbers of deals going up. I think that's really important for the health of the whole sector. Uh, I don't know if I need to say anything about these sections. I think I'm going to skip them because there's some other stuff I want to talk about. Here's the groupings that they were showcasing earlier. Platform and what is this? Analysis? No, that's not right. Building? Hard to read that. Gotta be analysis. That doesn't make any sense. All right, skip what I was about to say because it doesn't, I'm reading something incorrectly. So they're saying that almost 5 billion has gone into the space tech industry in 2023. The space capital number is closer to almost 12. So pretty big difference between those. I don't entirely understand why they are so different. I don't know what one is tracking versus the other. Space Capital is really transparent about where they're getting their data sources from. So I'm a little confused about why their numbers are so different. But this, I don't think anybody's surprised for this. Let me just capture that. Platforms, the section for platforms, largely consists of constellation companies such as Hawkeye 360, who raised $58 million this quarter. Platform businesses typically require large and dilutive rounds of funding. However, the global political tension, such as the war in Ukraine, has driven the need for Earth observation data. Product and build are the next largest segments. So we all know what's been going on. The world has gotten pretty tense in the last 3 months. And Earth observation is the winner. I don't want to capitalize on other people's suffering, but now is a pretty good time to be mapping the whole world every day, digitizing, visualizing the world every day. So a lot of people are paying attention to that. Number of deals. I really like seeing this. Just it's almost the largest section. Build is the most, but the second largest section is Beyond Earth. So that's great. I mean, we're not even finished with the year. This is only Q3. And it's double the last 2 years, and it's 4 times bigger than 3 years ago. So suddenly people are paying attention to Beyond Earth, and that is very exciting to me. That is probably the best news I've had in a little while. I'm going to be, I don't want to say pitch because it gives the wrong impression, but I'm going to be presenting Liftport's project to some folks in a couple days. And it's encouraging that we're actually starting to get meetings. We've had 3. This will be our 3rd kind of formal VC pitch. And again, pitch is the wrong word. It is an introduction handshake, not a pitch. But it's a step, right? And so finally, the world's starting to pay attention to this. I just said a minute ago, it's kind of nice to see lots of deals being made. I think that is really important. That's the seed corn of the seed corn of the industry is planting a lot of seeds because not everything is going to work, right? So the more deals you can have, the better off everybody is. And you can see there's been some consolidation here. So to me, this is kind of, instead of it being concentrated in just a few places, they're spreading out the risk amongst several different, these 7 segments. I think that's important. Most deals were made in the early stage and the late stage deals. I don't understand that. I think there are some of these big deals that we just described. This is $1 trillion worth of deals, $1 trillion worth of deals in just the top 4, right? Sorry, I said trillion. Wow. Whoops. Sorry. $1 billion worth of deals in just these top 4. It's pretty telling when the top deal is 350 million and the 10th deal is 33 million. That means there's a big, long tail of investments behind this, underneath this. So I'd like to kind of see the mean versus the median versus the average. I think that would be useful information. All the seed deals, well, like we were just talking about, and again, mostly in the build section. So it's cool to see that happening. It's promising to see seed stage funding continued to increase in 2023 despite the fundraising environment. So just kind of highlighting what we've already talked about here before. I'm going to skip this because we've kind of already talked about it. I don't think it's a surprise to show that investment by region is being led by North America. And by North America, really, we're talking about mostly the United States. There's a little bit of stuff happening in Canada, and I'm very unaware of anything happening in Mexico. So no surprise there. I'm a little, maybe this is where the numbers for Seraphim space, generation space, the numbers for Seraphim and the numbers for Space Capital are so different, because I'm seeing a lot of stuff in Asia that's happening, and that is probably accounted for in the larger number of Space Capital and maybe not being accounted for in this smaller number by Generation Space. So little surprised by this. I think these Asian numbers are low kind of across the board. So a little worried about that. And I hate, because, my International Space University roots are showing here. I hate that the rest of the world investment levels in dollars is at the noise level. Like, you can barely see these dollar amounts at the bottom corner here. There are 4 bars to this bar chart, and you can barely see the rest of the world. So that's a little disappointing. I'd also like to see more investment happening. We all know that 2021 was kind of the heyday of the first stage of commercialization of space. Lots of money was flowing in 2020 and 2021. I would like to kind of see that picking up again. We're not there yet. We're not there yet. I think that this level of numbers of deals in the last 12 months is also pretty pretty obvious. 2023 was pretty good. 2022, this is all quarter three. So 2022 and 2023 were both good years in quarter three. I don't know why that is. I don't know why Q3 seems to be the time when people are writing checks. I certainly didn't notice that myself. Asia is making larger investments than North America and Europe. I'm a little surprised by that, but I think that probably is China trying to build out its commercialization sector. I'm a little surprised by that, and it doesn't make a lot of sense to me. Yeah, I don't understand that. Okay, I think we've already talked about that. This is what I like seeing. Q3 2022, 2023. It's product and Beyond Earth. They're getting you couldn't even see it in 2019 and 2020, and 2021, 2022, and 2023. It's getting steadily larger. So, want to keep that trend happening, but that's almost an exclusively Americentric perspective. It's mostly, if we go back and look at the companies in the in-space economy ecosystem, they're almost all American companies on the Beyond Earth element. And they're taking up a big chunk of money, right? We already talked about that. Yeah. Well, why is that, right? I mean, it's expensive to build a rocket, for sure. Of course it is. It's not as expensive as it used to be for building a satellite. I think we could probably launch a satellite for $250,000. Liftport could probably build and fly a satellite for maybe $250,000 at this point. I don't know what flight costs would be, but I'm sure we could build something useful. But these Beyond Earth companies, space stations especially, and maybe a little bit of the moon, that's buckets and buckets of money going into that system long before there's very much revenue. So hats off to the guys at Axiom, the folks at Axiom, because it's going to be a while till they have any sort of break even. And again, same thing, just a different chart, a different way of looking at it. As long as Series A and Seed, especially Seed, is kind of continually trending up, that says good things for the health of the ecosystem. Not every company is going to survive, but by spreading some of that that capital amongst a lot of different companies, it's a pretty good way to diversify your portfolio. This, however, is not as exciting, right? It might be a lot of deals, but it is not a lot of money, right? These kind of make me a little bit bonkers. I would like to see more actual capital put into these sectors. But these numbers of deals, I mean, those are tracking $250,000 investments in XYZ and the LMNOP company, as compared to 350 million going into Axiom, right? So, that there's a lot of deals, but they're small dollar deals. I would love to see that grow. Series A fundraising fell after many years of growth. So that's not great for us. That's not great for this industry. This is a good number, but by itself, it means that the numbers of investments and the dollars of those investments are very low. Okay. So we just looked at U.S. activity. Now we're going to look at Asian activity. Almost nothing going into Beyond Earth. Maybe half of what it was in the U.S. They're doing the same thing. The stages, lots of stages, but they do have a little bit more money going into Series A's. So that's something to be paying attention to. Okay. I don't really pay that much attention to M&A. I mentioned Redwire and I mentioned Voyager. Tethers Unlimited was bought by a company about a year ago also. I forget the name of the company that bought them, but that growth by M&A strategy is well known and well proven. But I haven't really paid that much attention to it. So it's not an area that's directly impacting Liftport. It's not directly impacting some of the companies that I'm following. So it's an area that I just have not paid that much attention to, with the caveat of a couple of days ago, Multiverse Media was acquired by Space News. We talked about that a minute ago. So I'm a little curious. Maybe I should be paying a little bit more to this sector. But something like this, I'm going to read it. While we only track new space companies as part of this quantitative analysis, there have been several important M&A announcements in the space sector. These transactions can have an impact on the new space sector. For example, it is worth noting that $4.7 billion acquisition of Aerojet Rocketdyne by L3 Harris. This acquisition is likely to reduce competition within the rocket manufacturing segment, and thus we can expect investment in propulsion companies at the early stages to increase in response to a gap in the market to foster innovation. Well, all right, that all might be true, but no part of this impacts what I'm doing here at Liftport. So I just simply have not paid very much attention to it. And I'm not really paying attention to who's buying who and when. So I don't want to come off as some expert about a topic I just don't know that much about. So, you can read the chart yourself. New space is the biggest part of the mergers and acquisitions. But beyond that, I really don't have any insight to this. Finally, we're going to end with these SPAC deals. I have been skeptical of the SPACs since day one. I was slowly starting to convert, and then I doubled down on being skeptical. So I don't really have anything good to say about these SPACs. I think they were premature. One venture capitalist I know, Michael Mealing over at Starbridge, said once that the public got the deals that the private investors passed on. So all of these companies went to private capital, to VC, to angels, private equity companies, and they did not receive the money, did not raise the money that they wanted. So they went to the public markets way less sophistication in most cases to these public markets, and as a result, these companies are way down from where they used to be. So that's not terrific. That's not terrific. I still remain a little bit bullish on Redwire. I was from the beginning. I would like something great to happen with Momentous. I have high hopes for that. I really admire the folks at Planet. So these are not all duds. I admire some of the people at Worldview. These are not all duds, but it is hard to be an investor in the SPAC sector. Whoops. I wanted to show you this a little bit more. Wow, what is going on with my screen here? Sorry about that. Spire is a bunch of International Space University folks. So is Planet. So is Worldview. So there are good people in these orgs. The ISUers I know at Virgin have left. But I mean, if you come into the world and say you're going to have a $2.3 billion valuation, and it drops down to a $450 million valuation, that is not good for you long term. So, so I just kind of encourage you to read this chart yourself to kind of get a handle on what's happening here. I remain hopeful that as an industry they can bounce back, but I'm worried that many of them will not. And with that, I'm going to go ahead and close out. I like Seraphim. I think they do good work between their Angel Platform Accelerator, VC, and research. I think they have done a good service for the space economy, the space sector that we all are paying attention to. And I hope for the best. Part of their company is listed on the London Stock Exchange, which I actually did not know that until I was reading this document. So I'm going to go look that up afterwards. And with that, I think I'm going to close out. This is their portfolio. There's some pretty interesting companies in here. I think I'm going to skip some of this. They've got a bunch of companies in their accelerator. I'm hopeful that some of those become household names. I think I've talked about a few of them earlier today. Yeah, I'm going to skip that. Okay. And with that, I'm going to close out. Thank you all very much. Join us next week when we get back to Monday, Wednesday schedule. Join us next week for Red Planet Live on Tuesdays. Red Planet Live and Pioneers of Commercial Space Development. And then join us soon for our defense-focused show. We're going to call that the Space Power Hour. So thanks very much, y'all. Appreciate it. See you tomorrow. Bye-bye.